Good afternoon, and a very warm welcome to the Raffles Crew podcast. I'm delighted once again to welcome Gary Dugan, the CEO of the CIO office. Gary's based in Dubai, the center of the world, as he says, and we are looking forward to hearing from Gary about what's going on in the Asia Pacific region over the next 3 months, particularly given the kind of uncertainty that we've seen created by tariffs emanating in the US. And for those of you who haven't seen it, we had a very lengthy discussion about a week ago on how to interpret those tariffs. And I do recommend that you subscribe to the Raffles Crew YouTube channel and have a look at that. Now, the intention with this is that we're going to just give you a quick flavor of what's going on in the region over the next 15 minutes or so, in order then within the next week or so to have a much more in-depth panel with three other experts on different aspects of the region. We're going to be looking at Asia Pacific in detail. So Gary, welcome. Good to see you.
Thank you.
Over to you.
Well, Simon, firstly, thank you for inviting me now on to discuss these things. And it's such exciting times. But I wanted to start with a positive because as I prepped for this call, I was just struck by how the tone has changed over the last month. So let me just give you some of the bad news first. If we look at Asia in general, the IMF's expecting growth rates this year to be down on what they were last year. And that comes as no surprise, but given the difficulties we've seen over recent months. But to give you a number, we're looking at around 4% compared with 4.6% in 2024. Now, some of the concerns are clearly about inflation, and we are expecting a pickup in inflation, but nothing like what maybe the United States faces. So expect inflation to drift higher. Now, in terms of the general sentiment, what's really striking to me in the data is that a lot of economic data points have come in better than expected in Asia, not worse than expected. Now, they may still at a level be a drop on what we saw last year, but there's an undercurrent of more confidence than you might have expected. And that's helped certainly some of the equity markets and markets in general to perform better after that initial shock of Freedom Day or whatever it was that came out of the White House at the beginning of April. So I think there's a building confidence in Asia. And the important thing that we're seeing globally is Mr. Trump in his presidency may want to do things that make America great, but that's reinforcing the rest of the world to make their regions great. And I'm seeing a cohesiveness of policymaking. I'm seeing a pushback that's not aggressively antagonistic, but constructive in Asia, and with good examples in China. And of course, a fantastic speech that we had out of your own country in Singapore as to the population getting together and working together to make things better.
Thank you, Gary. I'm always grateful to start with a positive note. As you know, I'm a positive character. So, you've given us the high top line inflation. I think it'd be really helpful. Obviously, this is a huge region, and it's most of the world's population and much of the world's economy. How would it be if I were to just ask you to call out very briefly some observations on the most important economies in the region? If we were to say, look at China.
Yeah, well, China was already addressing its structural problems. There's structural problems that are facing the US in terms of indebtedness and, concerns about imbalances in the economy. So the good news was that China was already minded to the reforms and changes that are now needed at an accelerated pace because of the tariffs. The good news in the case of China is that if we'd been speaking a few weeks ago, we would have been sitting here terrified with the 130% tariffs that have been talked about. And that's the context of our previous discussion. But those numbers are coming down. And just a few days ago, again, there was this good entente cordiale, which was saying that maybe we won't be at that 130% number. Let's, in the interim, talk about 10 to 15 to 20%. So I think that has taken some of the pressure off, but it's not stopped the Chinese authorities from continuing to support their economy. Now, as we've seen in the past, major spending programs only create more problems. And the very good news in China is this is consistent good policy making of modest cuts in interest rates and increases in government spending in very targeted ways. So at the moment, yes, many people still don't believe that the country is going to hit its growth targets of the kind, I would call it the 5 to 6% range. But if you're still achieving the 4.5, that's a multiple of what the West will be doing, and it still leads to a vibrant economy. So there's room to be optimistic. We still don't know the definition of what's going to happen with tariffs, but the direction of travel is a positive one.
Excellent. I mean, the reality is that the US needs to do business with China, and I think that was always clear right from the start. The question is on what terms. So, thank you for that relatively positive news. China is obviously critical to this region and to the world. What about India?
Yeah, well, India, I suppose, sat back and go, well, it's not our fight, because this obviously was something that they felt they could benefit from. If you're going to beat up on China, then people are going to move their manufacturing to India. Now, that's not going to necessarily be 100% the case, but they are a net be beneficiary, I think, of this discussion, shall we say, about where a certain product should be produced. And China, and is a very, very cheap place to be producing things like iPhones. And probably India and Vietnam are the only ones that come anywhere close. So, at the high level on tariffs, a net beneficiary, I think. The
Okay.
good news is that inflation in India has been so well behaved of late. Even if there's a little bit of a tick up here, it isn't going to derail the country from seeing cuts in interest rates, we think, in the balance this year. You've got still a problem, though, of consumer confidence. If you go back a few months ago, people were sitting there saying, well, we've got this fantastic growth opportunity for the future, but it's not coming through at such a vibrant pace. And I think the Reserve Bank is very clear that they can only do so much, and it's for the government to instill some confidence. So what I'm hearing is, and it all comes to rainfall. So we're coming into the kind of rainy season in India. There's been a few odd ones, monsoons in recent years. Even if we have a normal one, that will dramatically, well, significantly, should I say, improve the lot of your average farmer. If you've got the average farmer doing well, he's going to have more spending power. And if he's got more spending power, he may even be on a plane traveling around the country. So there's a confidence that consumer spending is going to pick up. So, if the GDP forecast is at 6 a few months ago, it probably still around 6 today. And that's good news considering all that's happened.
That's absolutely wonderful. And just a reminder to our audience, welcome again. And thanks to Gary Dugan for leading us through this discussion on the financial outlook for the region. We will be taking these numbers that Gary has so kindly produced and having them examined in more detail by an expert panel in the course of the next week, including a deep dive into what this means for China, a deep dive in what it means for India, and some specific analysis from an SME perspective because most companies in Southeast Asia are SMEs. They're not multinationals. You might sometimes forget that given what we hear in the media, but that's the reality. More than 90% of companies are SMEs. How they feel and also what the implication from a supply chain perspective are, because those have an immediate impact on how companies do business around the region. So we've talked about China, Gary. We talked about India. I must say you're uncharacteristically positive about both. So that's absolutely great.
Mm.
So what if we get a bit closer to home? I'm sitting here in Singapore, ASEAN, Southeast Asia, 660 million people, growing very fast, quite a young demographic. What do you see for Southeast Asia?
Again, I see these countries working through it, but your starting point that things were a bit softer. You'd had some of the political issues in Indonesia, which had caused a pause to activity. In Singapore, you've seen a negative quarter of growth, which came as a little bit of a surprise. But because of the pause in global activities, people just didn't know which direction to send a ship, whether to load up, whether to order, whether to wait. That pause is still working its way through the system. So in countries that have been more dominated by the need for export growth and haven't had a vibrant an acceleration in consumer spending growth, nor necessarily the relief of interest rate cuts, that has caused a pause. So what I'm saying to people is just work your way through this pause. Do not think that that's the trend, because in all those countries that I've mentioned, and even namely in terms of Indonesia, there will be the opportunity to cut interest rates. Now, this is very different from the past. In previous crises around the region, you would have had maybe a burst of inflation, but you would for sure have had a weakness in your currency. And when you've got weak currencies, you can't cut interest rates. It's been very different this time. The dollar has been dropping away. Local currencies have been stronger. And that will enable, at a time when I think the central banks know what they're fighting in terms of a slowdown, we will be getting cuts in interest rates. So it's not as vibrant as the first two that I mentioned. They don't have the same levers to pull, But I think the ASEAN region, in many people's view, is one that's going to make a comeback rather than being struggling for growth come the turn of the year.
Gary, we will have more detail from you on the various economies around the region once the data is out. Um, is there anything to be said about Japan, which after all is one of the world's largest economies?
Yeah, I think this is the one that's struggling a little bit in terms of its story at the moment because, you had an economy that was facing higher interest rates rather than lower interest rates. And ironically, that was going to be a positive because we were finally going to get inflation back into the Japanese economy. If you have more inflation, then you typically get people spending more money as they try to buy cheap goods as opposed to more expensive goods a month later. So that dynamic has really been disrupted by what's happening because now Japan is sitting there go, oh, we've got too much inflation. We don't really want this. And you've also got a corporate restructuring going on that is somewhat disturbing to the economic system and is causing trouble. And it's been compounded clearly by this lack of clarity around Japan's trading partner in the United States. So I think there's just maybe just if there's one part of the ASEAN or should I say the broad Asia economic story that is still a little bit undecided, it is in Japan. Growth numbers have come down, inflation has gone up, and we're not entirely sure at the path of interest rates. So that's probably one part of the region that is struggling a bit in the current context.
That's really interesting. Well, for those of you who are fascinated by what Gary has to say, obviously there's a lot more detail. And just a gentle teaser that we are going to have detailed sessions on India, where Professor Salvatore Babones, who recently interviewed Mahendra Modi, is going to talk a little bit about what the outlook for India is. And we're going to have a session specifically on China. We haven't mentioned the antipodes. So, given that Australia has just had an election and there's been quite a lot of toing and froing, can you say a few words about the outlook for our Australian friends?
Yeah, and it's a positive one. The growth rates that we've seen of late have been a surprise to the upside. And if there's one takeaway from what's going on in the world at the moment, is we're getting a bit more of a dysfunctional world. We're getting a little bit more inflation than we would typically expect, and that is good news for commodities. So Australia is the kind of the Asian commodity play is definitely one area that I think in terms of investment flows is going to be a positive. But it's good news that they've finally sorted out their politics. They've finally got probably a central bank that is in a place to deliver to the market what the market is asking in terms of interest rate cuts, and an economy that's got a bit of momentum to steer its way safely through the challenges of these tariffs. So I would say that if people are looking for places that they might play longer term in greater volume for the future, we are seeing people say, you know what, Australia is away from the trouble. It's got a great commodity background. It's sorted out some of its domestic politics. It probably is an economy that could surprise us over the medium term. So short term, no huge problems. Longer term, maybe a better story.
Wow, good story for investors there. So watch this space as we look into Australia in more detail in the future. I guess um, this has been so positive. I'm almost inclined to stop here so that we leave with this warm glow around us as we head for the weekend. But let's just briefly touch on Singapore, where I've lived for 32 years. Um, quite a challenging set of changes in Singapore recently. We recently got a new prime minister. Do you have any particular views on Singapore's future as an economic center and perhaps as a financial center?
No, again, I go back to that if you've got a kind of common enemy, then people tend to kind of just work more cohesively together. And I think the recent elections show that, listen, we just want a strong government that's very single-minded about what it needs to achieve. And let's just get on with it and not debate the edges of policy making. So that I take as a positive. Secondly, the world is moving east, and there are very few developed countries with the financial infrastructure that Singapore has. And if I could say one thing to the country is that, really step up. If people look at currencies they want to buy in the world, it's Singapore dollar. Can I find instruments, financial products in Singapore denominated in that currency that I can invest in? No, I can't. It takes me days to buy a bond if I want to buy it in any volume. So I would say be more ambitious. You can be a significant financial center beyond what you're doing at the moment. And I think the opportunity will be there because the center of the economic universe of the world is moving to the east, and Singapore will be a very important component of that.
And Hong Kong, although it's important in financial terms, is perceived as problematic because of the lowering shadow of China. Take whatever view you will of that. Wow, that's really fascinating, Gary. Very positive outlook. Um, I'd like to thank Gary Dugan for giving us a very clipped and very hard-hitting analysis of what's likely to happen in the region over the next 3 to 4 months, especially given the uncertainty that we've got. And I would remind you that the Raffles Crew focuses on Southeast Asia, on investment, on jobs, on livelihoods. And we are holding a whole series of events, including approximately a panel discussion on the implications of the forecast, which Gary shared with us. And we'll be hearing from supply chain, SME, and other domain experts during the course of that. You're welcome to subscribe to the Raffles Crew here and to join us that podcast. At that panel. Gary, thank you. I
Thank
wish
you.
you an absolutely wonderful weekend. I look forward to talking to you again very soon.
Indeed. Thank you very much, Simon.